You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
But the other side to it is the market is hungry for exploration. Like if you look at some of these news releases that have come out with these high grade gold and silver hits, and the companies have moved up, double, triple, in response to these discoveries. And I think, if you find the right exploration company and for me, there's a bunch of criteria that I want to see, I think that there's some tremendous value out there and potential in a market that's willing to pay for discovery.
This is Mining Stock Education, and I'm your host, Bill Powers. Thank you for tuning in again today. Today's show is brought to you by GR Silver Mining. The ticker symbol in Toronto is GRSL. On the OTC, you can find it under the ticker GRSLF, and in Frankfurt, GPE. And this is a Mexico-focused silver exploration and development company that's advancing and developing silver and gold projects. They have hit some recent discoveries of high-grade silver gold veins. And to learn more, go to grsilvermining.com. My guest today is my friend Brian Leni over at juniorstockreview.com. If you're not familiar with Brian's website or subscription service, head on over to juniorstockreview.com. You can also follow Brian on Twitter at junior_stock. So Brian, thanks for coming on the show today. And I'd like to start off by getting your thoughts on the gap down that we saw in Northern Dynasty yesterday. I mean, that was just kind of, it was breathtaking, actually, to look at the gap down, a 45% gap down. And when you look at the chart, you're like, wow, a lot of people lost a lot of money very quickly. What is your thoughts on this? It was due to the speculation that President Trump somehow was going to put resistance to the Pebble project up there in Alaska. And so what are your thoughts? And are there any lessons to learn here for speculators?
First, thanks for having me, Bill. Second, actually, I wasn't even following it. I've been I've been seeing the headlines about Northern Dynasty, and I pretty much just ignore it, to be quite honest. There was a lot of promotion for Northern Dynasty going back a couple of years ago, and the same hurdles are exactly what they're trying to deal with today. And given that promotional side, and the fact that I really think they're going to have a big issue getting around the environmental hurdles, I haven't really paid much attention. I think there's a lot of quality companies out there that don't have that risk. And that's what I've been focusing on, because I think with Northern Dynasty, that company is either going to be, sell for, or it's going to be valued at 40 or 50 cents, or it's going to be $4 or $5. There's tons of leverage there, but it's kind of one or the other. And I would rather not take on any of that risk. I think there's a lot of good opportunities out there that don't have that stigma attached.
It is a good trade, though, because if we look at this year, you could have made 5 to 6 times your money if you bought and sold at the bottom of the peak. And then back in 2017, you had a similar opportunity. And like you said, a lot of it had to do with promotion. Although this time around, it seemed like there were some fundamental indicators in terms of, the government saying you can go ahead and move forward with it. So this move seemed a little more legitimate in my opinion, but I would think that this would be a good example of one of those. If you're going to take a stab at it, as soon as the stock doubles, get your initial capital back. This is like a poster child for that, isn't it?
Oh, absolutely. And there's absolutely nothing wrong with that speculation, right? If people are comfortable with the risk to reward, I think go for it. It's just, for me, I guess I view the market differently, and I've never really had much luck in playing those high stakes speculations. For me, I like a degree of safety. I like it. In my view, I have to really believe in that degree of safety. Like, is the company that undervalued to what their intrinsic value is? Do I realistically see that this thing could be a mine in the future? And like you bring up good points. Like there's definitely some possibilities where, like, I've even heard that they're contemplating, this alternative mine strategy, which is much smaller than the original. But again, with the environmental. With today's society, and the outlook for the environment and the other social issues, I still think these guys are going to have a really hard time getting this developed. So it's something that I chose to ignore.
Brian, since we spoke last on this show, the market has heated up, especially in early August, and gold reached all-time highs. So I'm curious to know if, because of the speculative money and the marketing, how it can move a share price now, if that has at all changed how you consider taking a position. And I'll give an example of a recent conversation I had with someone in the know where they informed me, they said, Bill, when you're looking at a private placement or when you're looking at an early stage deal, just know that in this market, the minimum value of a shell is $5 million. So if you can get in anywhere close to $5 million before there's any marketing or speculation that will move the share price, before a genuine value creator could actually move the share price, you're probably getting a good deal. What are your thoughts here?
Yeah, I don't disagree with that. But for me, again, it's hard. Like, would I put my own money into something like that? Yeah, I probably would. Would I recommend it in my newsletter? Probably not. And there's a big difference there. You know, I'm probably more loose on how I would speculate with my own money, especially if I know the people involved in these smaller projects, but even ones like you kind of hinted at the beginning, that, you know, the valuation is what it is, but they've got a promo package, and this kind of flows in with Northern Dynasty. I would definitely I would stay away from recommending that in my newsletter, just because I think there's too many questions. Again, the risk is so high. For me, I would rather focus on finding those companies that are undervalued, and I still think that there's a lot. You know, although the market has been great the last 4 months, I've still got, I don't know, more than a handful of companies that I look at that are trading for less than half of their value, and that's where I would definitely focus the newsletter. But you know, with myself, I think I do have a little bit of high risk taste, and if I know the people, and I kind of have an idea of what the plan is, I probably would take some of those punts myself with my own money. But it wouldn't be something I cover in the newsletter.
So when you see value, would the primary value that you would see in this market be in development projects with exploration upside, or producers? Where's the value in your opinion?
I think it's across the spectrum. You know, it's quite amazing. I think the promo has been so good for silver, that silver bugs are definitely the most forward looking within the sector. And, you know, that's pushed a lot of the silver stocks up into these realms where, you know, I just can't touch. But there's definitely value on the gold side. And then I see value in some of the producers and the developers. The developers is probably something that has an existing 43-1 resource or a technical report. I think anyways, is kind of in my wheelhouse to be able to discern what the intrinsic value is. And of course, compare that to the market cap, and then have a look at their cash position and how they can execute a plan to unlock that value. Because that's I think where my strength is, that's where I would tend to focus my attention, or have been focusing my attention. And I think that's always done me well, you know, to look and play to my strength. And I think for investors, I think that's actually a key point. You know, I forget who said it, but there's, whether it's Buffett or somebody, but they say, you know, play to your strength, or invest in what you know, and you will always do the best you can when you're in that scenario. And I think it's absolutely true. It's something that I've seen and experienced. But the other side to it is the market is hungry for exploration. Like, if you look at some of these news releases that have come out with these high grade gold and silver hits, and the companies have moved up, you know, double, triple, in response to these discoveries. And I think, you know, if you find the right exploration company and for me, there's a bunch of criteria that I want to see. I think that there's some tremendous value out there and potential in a market that's willing to pay for discovery. Along
the lines of the Northern Dynasty, would you consider a bulk tonnage huge capex project that doesn't have a lot of the environmental and permitting risks that a Northern Dynasty would have?
Oh, absolutely. You know, to me, the bottom line is just economics. Whether it's bulk tonnage or like a high grade vein project, as long as the economics are there, I think it's fantastic, and especially those projects that aren't being recognized. And maybe it's the bulk tonnage projects that don't get the attention from the market. Especially from the newbies that are in the sector, they're looking for those high grade, 5+ grams per ton intervals. Because they're ignorant to the fact that a sub-gram per ton in Nevada or some of these other places can be just as profitable of mines because of the mineral processing and metallurgy standpoint. And usually these are at surface, so you can, like you said, you can open pit bulk mine these. Whereas the high grade, even though they're nice splashy high grade, usually it's at depth, and the cost of going underground is typically more than open pit. So it's always that contrast between the two. And as long as the economics are there, I'm agnostic to the metal and agnostic to the mining type.
I'd like to get your thoughts on selling at near-term peaks in gold. We saw one recently a couple weeks ago, and just as an example of the emotions that are attached to watching our portfolios go up and down, I purchased about $2,000 worth of Hycroft mining warrants, which expire in 2025. So this was just a couple $1,000s thrown. I said, let me just forget about it, see what happens one day. And then about 2 weeks ago, I looked in my account. I'm like, oh, it's $8,000, $2,000 to $8,000. I looked right before this interview, and it was under $3,000. So I was like, man, I didn't need that money. And it's a long term, but I thought to myself, well, I wish I would have sold at 8,000 and then bought it back now that it's a much lower price. Those are just some of the emotions, of course, that are attached even for long-term investors like ourselves. But how do you manage your emotions through these short-term peaks? And what are your thoughts about selling and capturing profits while you have the opportunity in a bull market?
It's a great question and topic, given where we are in the market. Emotion is one of those things that it can take a good pick that you make and make it terrible because you sell on an emotional response to a drop in price or something along those lines. You can make money a variety of ways in the market, but for me, what I've always tried to focus on is myself and understanding how I react to stress in the market. And particularly this has to go with volatility and swings in share prices and metal prices. So for me, the way that I mitigate the effect of emotion on me, and I should say, when I say mitigate, it's mitigate to a degree. You can't eliminate it, and I still make emotional mistakes in the market. Don't get me wrong, but I mitigate it by not trying to guess where the metal price is going. That's one big thing. I think the metals markets are huge, complex systems, and you can look at supply and demand, but there's so many inputs and outputs. I've just found over the years that I cannot try to guess where the metal price is going. I have an overall, 10,000 foot view on where the metal price may be headed. And I keep, as long as that stays in place, then I'm okay. But I don't try to guess with those interim or short-term fluctuations. I focus on the company and the value proposition that specific company poses, and that set of criteria that not only the value proposition, but the people, the cash, and all those important points. Because ultimately, no matter where the metal price goes, whether it's going to $10,000 or $5,000, it doesn't matter if the people can't execute. And some people say, well, bull market is a tide that rises all boats, and that may in fact be true. But I still want to focus my attention on the best companies, and so having a set criteria that you can follow, and pick your companies in that sort of way. And not try to guess where the metal price is going, and recognize that the market isn't going to go straight up. It's going to be volatile, and mixed in with all the stuff that we're dealing with in the world these days, a possible second wave of COVID, a very, very controversial U.S. election, which I think, given the polarization between left and right, not only in the States, but in the worldwide, but especially in the States right now, whoever wins the U.S. election, you're going to have 50% of the population that's unhappy. And when you mix that in with everything else that's going on from a financial standpoint, I think there could be a lot of the volatility on steroids and that chaotic nature. So the moves in the market could be that much more. So if you can fall back on this sort of quantitative approach on how to pick companies, And then for me, the other component to this is a set of rules that I follow whenever I'm going to make a decision. I'm anchored by those rules and how I look at the companies, and that helps me mitigate that emotion that is overarching. And unfortunately, I think is only going to be increased in this last quarter of the year.
So then, is there no commentary or analyst input in terms of the price action in precious metals that you take into your investing? Are there any commentators you respect, or you just basically tune it all out?
I try to tune it all out. It's impossible to get past all of the headlines, but it's just, I sit there and I say, okay, so there's definitely technical guys that I fully respect and I like to listen to them speak, but I don't, even let's say I thought that someone was correct and they said, oh, we're going to have a pullback of $200 in the gold price. I don't think it wouldn't change anything I'm doing in the market. I sell on the way, like I'm always trimming my positions to have cash and de-risk, even though that I'm searching for value out there, which is, a margin of safety in itself. But I'm always reducing my position or my exposure to the market, so that when those corrections occur, whenever they occur, that I can deploy more cash into new positions or add to positions. And it's just remaining constant in that, that I'm able to, mitigate that emotion. Because for me, I think in the past, what happened was I would try to follow the metal price. And it's like, oh, you know what? I think it's going to go down for these reasons. And, you feel that adrenaline rush and you're like, I'm going to sell this position, this position. But the thing is, a lot of these companies that we're invested in are just in the midst of the core part of their exploration programs. So you pull that money out thinking that this correction is going to be, I don't know, 4 months or whatever. And you miss. And then the stock, they hit a great interval of, 10 grams per ton over 10 meters. And you miss that great jump in the share price, basically, essentially, maybe the hallmark of your investment thesis. So for me, I just try to remain consistent. I trim as I go. I understand the plan for the company, and if I'm going to sell a position altogether, it's based on stuff through the company, not the metal.
Isn't it Rick Rule who said something to the effect of, you've experienced the pain, now stick around for the gain?
Yeah. And, like Rick is, your interview, by the way, with him was excellent. And I think people need to pay attention to the things that he says, because, he is at that pinnacle spot of what I think, probably the perfect investor or perfect mindset for the junior resource sector. Be as unemotional as you can, have a very quantitative view of what you're dealing with. And he outlines that all perfectly, and he says it very well. So when Rick speaks, I'm always listening to the why and how.
Well, there's been a proliferation of royalty companies in the last couple of years, especially relative to a decade ago when there was only a few of them. So when you're looking at a new royalty company that's popping up, what unique characteristic or value proposition does Brian Leni want to see before you would put your money into that company?
For me, I think the success of a company is not only going to be like a technical part of a royalty company, because you basically have two paths to follow, especially as a new royalty company. Either you're going to go after the producing royalties, meaning that stuff that's generating revenue, or more likely is you're going to go after, generative stuff. So deposits that have very early stage with a small inferred resource, or something with maybe a PEA, very, very early in the development stage. And therefore the technical acumen has to be, very, very good. The team of people needs to be able to identify those high potential projects that'll eventually translate that investment into a producing royalty, 5 to 10 years down the road. And, there's a couple companies out there that I think have the right teams that can do that. The second part to that, like I said, is buying producing royalties. And that again has technical acumen, because you want to make sure you're buying a good royalty or stream. But I think what's more effective on that is who you know. So the network of people that are attached to that management team that can get you exposure to the deal. I've seen in a couple cases where, knowing the right people, the right network, you have, 5 royalty companies bidding on a royalty, and the one that ends up making the deal is the one that had the right strategic shareholder who had a connection to that company that was selling the royalty. And so I think if you can identify the royalty companies that have the right connections, that have the technical acumen, you can be successful or they'll be the ones that are more successful in growing their company. The side note to that is, I also think and as you know, the royalty company that I just invested in has high growth potential. They're sub $100 million market cap, and therefore, even if the deals are on the smaller side, they can still make a nice impact to their market cap or their valuation, given these small deals. And so for me, the company that I ended up going for is Elemental Royalties, and I went there because they have the right team. With high technical acumen and access to deals. They've got Discovery Group that's involved with them. And they're going to be pushing for these revenue generating royalties to start off, which may take them into some riskier jurisdictions. But I think with the things they have in place with management and the push towards buying producing royalties and the low market cap, I think there's tremendous growth potential. So that's kind of what I'm looking at and how I differentiate between the royalty companies.
When you're looking at a junior and you're analyzing the share structure, which I think is one of the most important things for a speculator to do, one of the first things you want to do is look at the share structure, see what the float is, say if things go right, how much upside do I have here? And you should do that on a fully diluted basis, which takes into account all the outstanding warrants. So how do you look at the warrant overhang, as we call it? We can look back to Minera Alamos, which has just been on fire the last 2 years. But it only took off, even though the market started to become aware of the story 2.5 years ago. It only took off after that, I think it was multi-100,000 share warrant overhang came off. And then the stock just started to fly. It was almost like a textbook example. And I know this is kind of a long question I'm posing to you, longer than normal, but I have had this discussion with someone when we were talking with a company and a very informed investor, which we were kind of on different sides of the issue. And I said, as long as the catalyst is strong enough to where I think that there's going to be enough interest and buying power coming into the stock, my greatest concern isn't the warrant overhang, if I think the catalyst will be strong enough to elicit enough buying to kind of power through those warrants. I mean, what are your thoughts here, Brian? Could you share some insights?
Yeah, I think generally speaking, a warrant overhang can be very detrimental to a rising share price. And there's one particular company that I can think of that it was a real concern for me moving ahead. They would, like you mentioned, they're really going to need to hit on their catalysts, and the market's going to have to be with them to push that share price through that warrant overhang. But it all depends, with Minera Alamos, Doug Ramshaw did a great job, not only from a technical point of view and how they executed on their action plan, but also in how they promoted the company. And he got the market's attention, and he was very upfront about that warrant overhang. And I think that's what helped propel that company forward. But I think they're fewer than the companies that have these huge overhangs, and it ends up destroying it because they can never kind of get past it. And so for me, it's definitely it's something I look at, but I'm very specific. If the company has got a set action plan, I really have to believe that they're going to hit on their action plan to bust through that resistance. The other side to it is what I would say to a lot of investors out there. Why not just wait and see what happens? Obviously, if there's a large warrant overhang, just sit on the sidelines, let the company execute on their action plan. And if they're successful, that's going to be met with selling. So I don't think you'll see the price go crazy, and it'll give you a chance to make up your mind whether you want to go in and be an investor in the company or, pass on it altogether. And that's, there was one company in particular that I had in the portfolio, and it was my second sell of the year. They've got a large warrant package that's coming or expiring in November, and I decided to sell the company and wait, let them do the drilling, let the warrants be exercised, and then we'll take a look at it again probably in the new year. So that's kind of how I've approached it.
You've been listening to Investing Insights from Brian Leni of JuniorStockReview.com. Go check out Brian's subscription service if you're not familiar with it, and he also has a free email list that you can sign up on over at JuniorStockReview.com. Brian, as always, thanks for coming on today's show and sharing your insights.
Thanks for having me, Bill.